Hey, welcome back. Today we have Russell Ball with Calibre Mining joining us today. Hey, Russell, how are you?
Morning, Garrett. Pleasure to be here.
Good, good. Thanks for joining me. I've been down to your mines in Nicaragua last year. You guys are a new company, started last year. It's an interesting story because I also knew your team when they worked at Newmarket and they built Newmarket. Blaine Johnson and Doug Forrester, that team. And Newmarket was a tremendous success. Basically, right from day one, focused on existing assets, producing assets that are generating operating cash flow, free cash flow, and enhancing them and making them better. And then Newmarket, you end up getting taken over by Kirkland a few years ago, right?
Correct.
Now, that's got to be one of the biggest value creation stories I've seen in the whole sector. From day one at Newmarket all the way up to your Kirkland shares that you own now. Have you ever figured that out? What your return on investment
Yeah,
was?
it was certainly a great transaction and journey for shareholders. That I think that's what separates this group of people, and really Calibre, as you said, is Newmarket 2.0. I wasn't involved in Newmarket, unfortunately. I was still doing the big company thing back then. But our COO is a good personal friend of mine from our Newmont days, and I got to watch that story from the side. And it was very interesting to me to see how non-core assets could be turned around in a relatively short fashion by I'd say, a dedicated, focused management team that these are their only assets, so they have to make them work. And in addition to that, we've set the company up very similarly from a compensation perspective where, my view is aligning management with long-term shareholders. I don't mean the hedge funds and the people that rent the stock, but people that own it long-term, and incentivizing management to think and act like owners. And that's actually in our vision.
Right.
And so whenever we're having a meeting, I say, if this was XYZ mining company, as in your personal, would you be spending that?
Yep.
And it brings a different focused perspective to the discussion. And I think at the end of the day is what will separate returns in the longer term. In the longer term, I think sort of 3 to 5 years for us. And I'm blessed as CEO with a great management team, but also don't underestimate the value of those board members who bring a combined technical expertise. There's very few jurisdictions that they haven't worked in collectively. And it's a board that is really there to help and assist management as opposed to what I'll call tick the boxes and do what, the latest corp governance fad might be. They're really there to help deliver value. They're all long-term shareholders. And so it's a very different model. And it's one that, quite frankly, I think is very exciting and has given us the opportunity. B2 Gold's portfolio grew so quickly that these assets became non-core. And as you said, you were down there, you saw them. Their focus shifted to their big opportunities, and in particular Fekola and Mali, which has been a huge success for them. So what we saw was an opportunity here to bring a dedicated management team with enough capital to reinvest in the business. And we ran all of our numbers at 1,200 gold when you remember that, a year plus ago when we started those discussions, everyone was into cannabis and Bitcoin and no one wanted to talk about gold stocks. And, it's amazing to see how the world shifted, but we're in a very interesting spot here in the sense the operations are turning around quickly. And we saw that first quarter. Obviously we've been dealing with COVID like the entire industry, and the second quarter we were effectively shut down for 10 weeks. But I feel very good about where we are and the platform we built. And I'd say that, the foundation's been laid and now we have the opportunities to capitalize on it.
Yeah, a couple things that you said there, regarding being long-term shareholders. I've covered a lot of companies in the mining industry, both gold miners and silver miners. You have value creators and then you get value destroyers. And a lot of the companies are value destroyers. They don't care about shareholder capital. They care about increasing revenue at the expense of shareholders, which puts more money in their pocket. And it's surprising how many of these companies operate in that unaccretive manner. And shareholders are penalized. You'd think that would be like a standard in the industry, but the majority of companies don't do that. So the companies that do follow that are shareholders themselves, that do create accretive value, they stand out to me, and those are the teams that I like to align myself with. You guys in B2, right? B2, they were just focused on other assets.
Great operators, great project builders, but these assets, when we acquired them, were about 4% of their NAV.
Yeah, okay.
And about 8% of their production.
Yeah.
Which showed you they were the higher cost ounces and had shorter mine lives. And that was, largely a function of as B2 was ramping up in Mali and then the expansion, the capital, both human intellectual capital and physical capital, wasn't going into Nicaragua.
Right.
Because it wasn't their biggest and best opportunity. So the opportunity was for us to take those assets and rebuild them as, core. These were the same assets that started B2 Gold, right?
Yeah.
And people have a pretty short memory in the sense, for the last 3 or 4 years, the asset had underperformed versus guidance. And that was the perception in people's mind. And as much as we told people, you have to look at the entire perspective. These assets did very well when they were B2's only assets. They delivered consistently. And that's when they had the focus. And, I'd been on the sell side of a number of assets, both at Newmont and Goldcorp, and was always surprised just how well other management teams did taking those non-core assets. And now I understand a little bit of why, because we have, 120% of our focus on these. And we talked earlier, but Darren is truly a world-class COO that has been able to implement a lot of changes in the organization in a short period of time.
Darren's extremely impressive. He's extremely smart. He works very quickly. There's no BS. And he cuts it right to the bottom line. His hub and spoke model, well, the lever for you guys is Libertad, because, when B2 was running it, they were filling 90% of it, running it at 100% of capacity of like 6,000 tons per day, and 90% of it was waste ore. It was, 0.5 grams a ton waste ore. They were just doing that to keep the mill full to, generate production because, like we talked about value creators, they don't care. They were trying to increase their gold production. They don't care about the profitability of it. Whereas you get guys that know how to create value and are trying to generate more profits, such as, Darren. He came in and immediately he's like, all right, let's lower the production profile at Libertad. Let's replace some of that low-grade stuff with higher-grade ore. And then in Nicaragua, you get these deposits. They might not be as big as the deposits in Africa, but there's a ton of them, and they might not be as high grade. They're not 15 grams a ton, but they're 6 grams a ton or 8 grams a ton. So
So the hub and spoke philosophy, which was something, again, that we'd had some exposure to, was probably the fundamental shift in how these assets have been run. They were largely run as autonomous operations. So you had Limon, you had Libertad, and then you had an exploration group. And we put all those together under Darren. And, when we started digging into Pavon, we saw the opportunity, and B2 Gold had done some great work looking at, options to haul ore down from Pavon to Libertad. And you're exactly right. When we took the assets over, the mill was being run at about 2.2 million ton a year. Darren immediately shut down one of the lines, the ball mill lines, and, we backed it off to 1.6 because certainly at 1,300 gold or whatever we were last year, there was a lot of recreational ounce production that wasn't delivering positive free cash flow if you added in all the costs, right? Sustaining capital, everything else. So that was a real cultural shift for the organization that started, a couple of days after we acquired the assets in October. And then we took this concept of the trucking, and what Nicaragua has is a very large informal mining sector, true artisanal mining. This is, non-mechanized, near surface, sort of 10, 12 meter down. And there's this infrastructure that moves these ores around, and we effectively piggyback on that. And so what we saw was the ability to move ores from Pavon for, roughly a third of what you would do it in even Nevada, right? And so as we dug into that, Darren came up with, okay, let's consider this hub and spoke where Libertad is a design nameplate capacity of 2.2 million ton a year. With that stockpile, the 0.4, 0.5 gram that you alluded to, effectively done in 2021, we'll back that down and we'll be talking to the market, I think it's August 12th, about an updated outlook. We're working on a technical report to file for Libertad. Remember, when we acquired Libertad, the street's view was we were into closure and reclamation this quarter. as you alluded, this is really our crown jewel in the sense we have 2.2 million ton a year of installed capacity that when those stockpiles are done, we'll be running at about 1 million ton a year. But the grade will jump up significantly. The average grade now blended is sort of 1.5, 1.6 grams. That'll jump up to 4 to 4.5 grams net of these transport costs. So it costs us about, well, it was half a gram at 1,400, so a little less than half a gram now, to move ore 250 kilometers. So if you think what this Libertad mill does, we've got 1.2 million ton of installed capacity that's paid for, that's permitted, that we have the operators to run. So what that does for exploration is provides a huge degree of flexibility, and that you're right, these deposits, you don't get the multi-million ounces right out of the gates. They tend to keep on giving these low sulfidation epithermals, but you got to keep drilling them. So what it does is it really frees up the exploration group to think about sort of a 300 kilometer radius as trucking distance. And the beauty of that is anything we find doesn't have to carry the cost of any capital from a processing perspective. Most of these deposits come right to surface, so you're in relatively, you're in ore very quickly. You're not in a big strip campaign to expose it. So what we see is, and I'd say it's unprecedented today, is an ability to take a greenfield discovery to positive cash flow in 2 years. And why do I feel confident we can do that? We're doing that right now with the Pavon project. We just are in the consultation in the final approval process. This was a process we started focusing on in October when we acquired the assets, began the consultation, and we'll be in production in the first quarter of next year. They'll be all being trucked down to Libertad. And so that's an example that we're currently working on, but B2 did the same thing when they discovered Limon Central. So you have 18 months from discovery to first ore. So you have an environment where you have the infrastructure, you have the setting from a geologic perspective, and you have a government that understands mining. There's been 4 or 5 generations of mining. The permitting process is well established. The relationship with artisanals are well established. So we've had a great experience since we've been in there, and Pavon is sort of exhibit A of how you progress and earn your social license. And we're in development of that asset today. The road's being cut. And this is the opportunity I really get excited about is how do I take those 4 or 5 gram ore bodies that are out there, these deposits, and bolt them into a hub and spoke approach. So, Pavon is sort of exhibit A. That's one we've acquired. I'm looking for the next Pavon. And I think that we have a great opportunity over the next 2 to 3 years to one, find those, and then 2, quickly bring them into production and cash flow. And if you look at a lot of the other jurisdictions in the world, it's not unrealistic to say 10 to 15 years from discovery to production and first cash flow.
Yep.
We're in a very unique situation. So that's what gets me excited. And as we discussed, I've got the team behind me. We have more horsepower on the management team than the assets currently require. And that's a great position for me to be in as CEO.
Right, no doubt.
So it's
couple things here. Nicaragua, it's gotten a bad rap, especially in the United States. You hear about Nicaragua, I think, terrorists, banditos, whatever. I've been down there. It was great. Beautiful country. It felt very safe. But, you have 3 other companies down there that are doing big business. You got Royal Road, you got Mako, and you got Mineros. And all those are mining gold. Their stocks are all doing great. The government's extremely supportive. It provides jobs for the artisanal community, and they work hand in hand together. I think the perception regarding Nicaragua is slowly changing due to the success of these companies.
I'd agree 100%. I hadn't had exposure to Nicaragua. I'd been in a lot of countries in Latin and Central until about 18 months ago, 2 years ago. Great place to do business.
Yeah. And
supportive government.
If you guys ever have an issue with the artisanal miners, you call them up. The government's on site like the next day, right?
We have a great relationship. What Nicaragua did right, and I haven't seen this model anywhere else in the world, is they incorporated the artisanal mining into the mining code. And generally where you see that conflict is around land access.
Yeah.
whereas the government formally recognizes the artisanals in the mining code and effectively helps manage jointly with the companies the artisanals on your concessions.
You guys have artisanals like on your property, right?
Correct.
Yeah.
Correct. 1% of every land concession, they don't say which 1% is dedicated to artisanals. And so if you have artisanals working, you need to move them. The government comes in, you pay them for the development they've done. Yep. The government works through and you relocate them. And that's an ongoing process that's well established. And to me, that's a model that I think the rest of the world should follow. Right. In the sense of formally recognizing, because it de-escalates that conflict around land acquisition. Yeah. And in fact, we're buying artisanal ore today from artisanals just south of our property at Pavon. Yeah. Because we wanted to see the infrastructure to truck that down. We also want a relationship with our neighbors in the sense of the artisanals. We pay them, the agreed rate, but we pay them on time. The thing I really like about this relationship with the artisanals is we can take significant amounts of mercury out of the system and be doing the right things as a corporate citizen by bringing modern processing technology. And effectively, it's a win-win situation. It's a win for the artisanals, it's a win for us, and it's a win for the environment. Well, and so, go ahead.
Where do you guys stand with Jebeli as far as relocating the community that's nearby the underground on top of the underground?
Sorry, yeah, you're right, the Jebeli underground. Yeah, we actually are very close to having that issue resolved. What we had was a community artisanal miners that were actually, it's not on our property, and they were illegally mining to the east of us. So we worked through with the government. The concern was, the underground blasting would impact them. And we agreed to shut down. We reallocated assets. And, our base case assumption is that it'll be up and running October 1. We've had some significant progress, particularly during the COVID shutdown. I mean, we were shut down on operations, but there was a lot of work going on around permitting land acquisition and heavily underground. So I think I'm pretty confident we'll be back in there here towards the end of this quarter.
Have they moved the small community yet? The community, it's only 5 houses, 10 houses, right?
Yeah, there were 20 households, and then there were somewhere between 12 and 15, if memory serves, artisanal shafts on those properties. We're over halfway with the relocation and executing the agreements. And we built all the new housing. And I think there was a bit of a show me, trust me issue where, we talked to people about the housing and it was on paper. What we said is, we're going to go and build them so you can physically see them. And we're almost done with the execution of those housing.
You're moving people from shacks with no electricity and no running water into the modern age, aren't you?
Exactly. And there's a process. We've had a couple that wanted to keep mining as long as they could, and we've worked through that. As I said, we're very close to being in a position to get back underground and get that grade out of Jebeli underground, which is great.
Yeah, because Jebeli that is one of the high grade sources that is replacing that low grade stuff, but on top of Jebeli, you've got Pavon, and you have like 6 other opportunities, some near mine, some a little bit further away. But if one of them works, or if one of them doesn't work, it's no big deal because you have more to replace it.
Yeah, and I think that's what you're seeing by integrating these assets is, remember that Pavon has a very small 500,000 ton a year processing capacity. So it was constrained by that. By being able to truck ore for roughly half a gram, sort of $25 to $30 US a ton, for the 250 to 300 kilometers, you've delinked mining and processing. And that gives you so much more flexibility. So the multi-year outlook, August 12th, will show a ramp up because Pavon's a new mine. But if you just fast forward to 2022, you'll see about 1,000 tons a day is the assumption coming from Limon undergrounds over to Libertad, and about 1,000 ton a day from Pavon open pits coming down. And so you see about 700,000 tons a year of fresh ore. There's no more stockpile. So you're looking at, call it circa 4 gram net, at about 1 million tons. And that's where you see a significant step up in production. And because of the higher grade and lower throughput, you see much lower costs.
Yeah.
And that's really the opportunity we see. And it's it's 18 months away if you go out halfway into that time frame for 2022.
Well, your costs remain the same per ton. They just get divided by more ounces, so therefore your cost per ounce declines, right?
Yeah.
Yeah.
And actually, what we're seeing, though, I just add what Darren's brought in is some former Newmont folks we worked with on the supply chain, and we're actually through this downturn for COVID, we've gone after supply chain management and contract costs. So what we're seeing is anywhere between 10 and 30% unit cost reduction. So whether it's grinding media, cyanide, consumables, mill liners, we're bringing a little more rigor and discipline to that supply chain process. And in addition to higher production, we're going to see lower costs on a unit basis. And that'll start, effectively by the end of the third quarter, the inventories will have started to hit the bottom line. And, that's, I'll give you a good example, drilling. We've taken drilling costs from direct, just the contractor cost from $160 US a meter down to $95 US a meter.
Well, it's huge, especially with all the drilling you guys are going to be doing over the next year. It's impressive because, a lot of miners, they're not profitable. They continuously issue shares, dilute shareholders. You guys have only had one raise for Calibre. You had one raise for Newmarket. I don't know because you weren't there, but there weren't many raises. There was one, maybe one more on top of that. But you guys are profitable from day one. You guys are putting money in the bank, and
that's the interesting piece. I look at this as it's kind of 60-40 as I see it today. 60% on what we have today, the operations, the free cash flow. We'll continue to drive costs down, production up. We ran the budget last year, I think at 1,400 or 1,450, and there's a lot of cash flow coming, which is great. When I look today and I go where we are, we're in a great position. And this bull market in gold, we've seen a lot of equity get raised by, projects that historically have been challenged.
Yep.
And, we've had, I think it's 2 now, bought deals put in front of us to raise an additional, 20 to 40 million. And I've been very clear with investors when we did the raise, we wouldn't be coming to the markets for 2 years.
Wow, good.
And that was circa $1,400 gold. And, we're way north of that now. We're seeing costs come down, production up. So I think a little of this is, how you view your role as the senior management leadership team. Our view is to increase the value of the company on a per share basis, not the market cap by issuing more shares, right?
Yep, absolutely, no doubt. There's a couple other important factors. First being, your valuation, right? You just started trading last year. It's undercovered, although coverage is starting to pick up. It's just such a new name that a lot of investors are not familiar with it. Therefore, it trades at a discount. You guys are only valued at 362 mil enterprise value, subtracting the cash out of market cap. You're trading at 3.1 on current operating cash flow. The average miner trades at 6.7. You guys are undervalued by half. And then along with that is, the GDX ETF is has a huge effect on the mining sector. You guys aren't included in any of the ETFs yet. You guys haven't even seen any of that buying yet.
Yeah, Garrett, that's a good point. Calibre has been in Nicaragua for now almost 12 years as a junior explorer co. And that's, I think, why B2 felt comfortable with putting these assets in our hand. We had a good relationship. We had a previous joint venture with them. But these assets were kind of lost in the B2 portfolio, and we had no sell-side coverage. So, we were a TSX Venture listed company until last October. And in a very short period of time, we took Junior Explorer Co. up to the main board, and we started into production right away in a very positive gold price environment. So all of a sudden you have positive free cash flow. And yeah, you're right. I view our role as a management team, and the board's views the role from their perspective as closing that discount. There clearly was a discount. I think a lot of that was the underperformance in the most, recent, call it 3 to 4 years with these assets. Our role as a management team is to show people that it...
show them the money.
Exactly, show them the money. And I think we've started that, but that takes a long time. I've learned that there's no instant gratification, and it's quarter after quarter of the consistent execution, delivery, and that's a real focus for Darren and his team. So, I think that discount will close over time. you're right. I think the next catalyst for us is inclusion in the GDXJ. And we're getting pretty close. We've certainly got the revenue, the profitability, all of that stuff, the market cap.
Volume.
The issue is the trading liquidity, and it's sort of a catch-22, right? To get into the GDXJ, you need, I think it's $1 million a day traded for 90 days.
90 days, yeah.
Yeah, and what we've seen is, we're getting closer to that as we go, and at some stage we'll get in. And again, back to the new market example, they saw that impact and understood that impact of this passive, the ETF money, which doesn't discriminate against, doesn't try and pick assets or management team. It just flows in blind, so to speak, as people buy the ETF. So I think that'll happen, whether it's later this year or early next year. That'll be a significant jump. And then we didn't talk much about exploration, but we've gone from an approved program of about 47,000 meters to close to, if I include the infill now, roughly 80,000 meters. And that's been a huge shift for the organization that hadn't seen a lot of money into exploration. And, I think that's the other piece on the value creation opportunity that is looking right at us.
Correct. Like you said, Limon was a depleted asset, technically, when you bought it. And now with not many resources, and now you're going to be tacking on resources over the upcoming months, and people are going to be able to see the track in front of the train and become more comfortable with that.
The technical report here, August 12th, will really help, because we have one of those for Libertad, for Limon at least.
Okay.
Based on the Limon Central discovery that B2 had.
Okay.
What the market's view was, going into closure and reclamation at Libertad third quarter this year, and a $20 to $30 million closure cost and dealing with all of those social issues. And what this technical report's going to show is that couldn't be further from the truth. And I think some people are starting to get that and understand that, but you're right, without a broad sell side coverage until very recently, it's been up to Ryan and I to get the story out. And, at the end of the day, that's the opportunity. We've had a number of people like yourselves that followed the new market story that said, hey, it's a bit like horses. Sometimes you bet on the horse, sometimes you bet on the jockey. Right. And we're going to bet on the jockey, in this case, the team from new market, because of that track record. And, in this business, I think the credibility of the management team, just given it's inherently a tough, risky business. You're dealing with Mother Nature. It's all very well to have a spreadsheet that says this is what the NAV is. It's very different than to deliver that NAV. And I think that's a big part that, those active managers that are still left in the business are trying to figure out, particularly in this bull market where you see a whole lot of projects getting recirculated, maybe with different names and capital getting raised, is, where do I place my bets? And I think at the end of the day, placing your bets on the jockeys might not be the worst strategy. But again, I'm biased. I'm long the stock, but I feel very good. I mean, I came back into the business after effectively retiring at the end of 17 to do something different. And what I saw in New Market was a different way to think about the business, a different way to incentivize management, a different way to align management with long-term shareholders. And that's what gets me excited. And at the end of the day, we've got a great gold market. I think it's, we can debate what price it might go to, but I think it's going significantly north. And, for us, it's heads down and just consistently execute and deliver. And at the end of the day, the stock price will take care of itself. I don't look at it on a daily basis. I've seen too many examples of management teams that get hubris around, stock prices and think it's all due to them. And there's so many factors that weigh into that. Our job is to control what we control, and that's the business.
Right. Yeah, I totally agree with you. You can take a great asset and align it with a bad management team, and they'll wreck the asset. And you can take a great management team, put it on a bad asset, and they will generate value for shareholders. It's one of the most important factors in choosing mining companies, no doubt. You guys, you've got a busy upcoming year. There's a lot of catalysts coming up. You get the Pavon pre-feasibility study, permitting, resource and reserve update, all over the next 6 months, right?
Yeah, and I add a couple exploration updates in there as well. So yeah, we're it's busy, but it's good busy. Team's excited. We see the opportunity in front of us, and our goal is to effectively, one, communicate that and then deliver it. And that's what we're focused on. So yeah, a lot of news flow between, I'd say, now and certainly the end of March. If you think about this technical report that we'll talk about August 12th, it's largely what we inherited from B2. So call it end of 18, right? That's largely what we bought. We'll help people understand that with a little more clarity. The one that gets me excited is what we'll do probably March of 2021. In the sense, we'll then update both those technical reports, so Limon and Libertad, for all the work we've done, understanding costs, mine planning, block modeling, exploration, drilling, through to call it the end of October this year. So if you think about all that body of work from when we acquired the assets, October 15th to October 31 this year, roughly, we'll then do the work behind the scenes to update the models, update the production plans, budgets, forecasts, and talk to the street in March 2021 about 2 new updated technical reports. So, I think of this first one is helping reset or educate what we acquired largely. There's a little bit of work that we did. Pavon as an example, we did a 43-101 on that. But it's really then March next year where we say, hey, we've had these assets for a year. We did this drilling. We've done the operations piece. We understand the cost better. We understand the hub and spoke a lot better now that we've actually implemented. And here's what we see based on, October 31 data 2020. So that's a 2-phase process, if you want. We'll bring the street current, and then we'll say to them in March next year, here's a more fulsome and updated view with, the assets in our care, custody, and control effectively for a year, right?
Right. Yeah, you guys do a good job as far as managing expectations, as far as your forecast, your production and cost estimate, every year. You set a bar that you guys can reach, and you don't try to puff up expectations too much.
I had the pleasure and honor, quite frankly, early in my career of working for Pierre Lassonde for 3 years, right after we did the merger with Normandy, Newmont, and Franco, the original Franco-Nevada. And one thing Pierre beat into me was under-promise and over-deliver. And, back to your earlier comments on the industry in general, it's one that you tend to see a lot of over-promise and under-delivery. And, he beat it into me enough times that, that's the mantra. And I think you've met Darren in his former life at Newmarket. And, our team is very focused on doing what we say, because at the end of the day, the credibility of the team is worth way more than, the value to be had by, or maybe to be destroyed long-term by promising stuff you can't deliver.
Yep, definitely. Okay, that basically covers all my questions. Is there anything else that you'd like to add?
No, Garrett, I just appreciate your time and thanks for following the story and helping educate your viewers. It's a long-term process for us. We've got a great market right now, but we'll continue to deliver and execute on the plans and through Ryan and myself update the market on what we're doing on a regular basis, and that's good, bad, or indifferent. I just believe that transparency and credibility at the end of the day are key factors, especially for the generalists that don't have a lot of time to spend digging into the assets that want to deploy capital in the space. I think that bet on the jockey at the end of the day would be a pretty decent bet.
Yep, I agree. So, all right, Russell, thank you very much for your time. We'll be following you closely over the next year. You're going to be pretty busy.
Thanks, Garrett. Appreciate it, and stay safe down in Florida.
Thanks.
Take care.
You too. We'll see you. Bye.